Hello, and welcome to Smart Mortgage Insights. I'm Mandy LaRose.
And I'm Conor Levinka. Today we're going to talk to you a little bit about refinancing. It's kind of a buzzword at the moment. When to refinance, why to refinance, how to refinance. What do we have to say about that today?
Well, we're not doing a lot of refinances
We're
right
not?
now. No.
But it's a big thing to talk about.
Absolutely, it is. And it's kind of the $1 million question. People who bought homes in the last 2 years have been anticipating that, well, I'm going to buy this home, those rates are coming back down. And
When's that going to happen?
that's a really great question.
Why don't we know?
There's a lot of factors that go into that, and anyone who can tell you that they know when the rates are going to drop
wrong.
and how the rates are going to drop and what they're going to drop to, honestly, nobody knows. It's the $1 million question right now. We were told, by the powers to be of those who do some bit of guesstimating on what rates are going to be, that rates were going to be down by now, and
then last year and earlier this year.
and by the end of this year and maybe next year, but here we sit, and honestly, rates have been pretty similar to what they were last year at this time as well. I would say we kind of like fluctuate about 1/4 to 0.5% on pretty regular basis. The market goes up, the market goes down, the market goes up, the market goes down. But
so what happens when they do go down?
yeah, when they do go down, refinancing is definitely what people are going to be looking to do. So we just thought we'd talk a little bit about refinancing and what that entails, and just to basically explain what a refinance. And what a refinance is we rewrite, rewrite the current mortgage that you have into a new loan. Maybe sometimes you are going from an FHA loan and you're going to go to a conventional loan, or maybe you are in another type of loan and you're refinancing to another option. Maybe you're switching terms. So what we're going to do is we're going to rewrite that loan at the new interest rate, at the new whatever that loan amount is that's going to be. We usually refinance what your current balance is into a new loan. We can roll any costs that are any costs of the refinance generally into the loan if you have enough equity into the property. And then now at the end of it, the goal is to either have a lower payment or a shorter term, something like that, when you're looking at refinancing.
Definitely. It's just something that we'll constantly look at. Ultimately, we really would like to see, an interest rate reduction of about 1%.
Yeah, that's usually what it is. I think everyone's situation is different, especially when we do start getting into these higher rates. When we were down in the 3s and the 4s, maybe depending on your loan balance, maybe it was a 1.5% reduction, something like that. But with our higher rates now, sometimes if you've been in the loan maybe less than a year, maybe even 3/4 of a rate change makes a difference. You know best, and yes, we the mortgage company will help guide you on what your options are, but you're the one that makes your payment at the end of the day. You're the one that's comfortable with the situation that you have. So that's one reason why someone would refinance, is to just lower the payment or lower the terms. But what's some other reasons that people might refinance?
Sure. I mean, it's something that we're always going to discuss with you as far as goals go. And so, one of the goals that we just discussed was simply lowering your payment. There are other goals that could happen as well. It may be that you bought a property with another individual, whether it was a spouse or maybe a parent co-signed you.
Oh, is your goal to get rid of them?
Well, sometimes.
Okay.
Sometimes. I mean, we have to be realistic here. But maybe a parent co-signed for you, and you now can afford it on your own, and we want to refinance for that reason. Maybe you have been really diligent and paid down your mortgage, and in the meantime, your property's values have gone up, and you would like to do some improvements. Maybe you want to take some money out to do some improvements. Maybe you want to consolidate some other high-interest debt. We would do what we call a cash-out refinance, which means we would give you some of the equity. We can't give it all to you, but we could give some of that equity to you and combine it into your loan to one low interest rate.
Absolutely. Another reason to refinance, to drop mortgage insurance.
Absolutely.
You can, as values have continued to go up, You can look to refinance to drop that mortgage insurance if the current servicer isn't willing to drop that mortgage insurance at this time. Gosh, mortgage insurance hard today. Because generally servicers don't drop mortgage insurance until you've paid down the 20% equity based on when you bought the property. But as we all know, values have been gaining quite a bit in the last several years. So you might possibly have that already, and we could look to refinance you out of the loan you're in and into another loan without mortgage insurance. Maybe your credit scores have gone up dramatically from when you bought before, and maybe you don't have that 20% equity, but conventional loans, mortgage insurance is based on your credit score. So maybe you've paid the loan down a bit, you've got a much higher credit score, and maybe the reduction of mortgage insurance will help, or no mortgage insurance at all. Many people use an FHA loan as a vehicle to get into the loan, but generally on an FHA loan, unless you put 10% down at conception, you'll pay mortgage insurance for the life of the loan. So being able to refinance out of that option is another great thing too.
Definitely. It's something to just really discuss with goals. I mean, because there are going to be fees with refinancing.
Absolutely.
And so we want to take that into consideration. And so if you're planning on, moving, upgrading, something in the near future, 6 months, 12 months, something down the road, a refinance would not be right for you. We need to have enough time to recover the expenses that have cost us so we could realize the savings that we're going to have on the monthly payment. So it's all about being in touch with your loan originator and talking about your goals. Some people might like to have the lowest payment possibly, and that would be a 30-year fixed mortgage. Some people would like to have a higher payment and get rid of that mortgage a lot quicker. And in that case, we can offer a refinance into a 15-year fixed mortgage. You have a little bit lower payment, a little bit lower interest rate typically, and then a little bit higher of a payment.
And when you do your loan here with us at Residential Mortgage, we have lots of alerts in place that are going to help to, with when rates go down, if it starts to make sense for you to refinance. Also, when you've got equity built in, we have some alerts on that as well as to where your equity position is sitting. And then we cannot finish the show without mentioning. If you do a loan with Residential Mortgage, the golden ticket, yes, you will receive a golden ticket. It's good for $1,000 credit on a refinance through December of 2025. So some great opportunities for refinancing down the road. When those rates do drop to that key point that looks amazing to you, then we can take advantage of it, take the opportunities.
Wish we could really predict when rates were going to go down. What we can tell you is that we watch them on a daily basis, and we will absolutely let you know the moment that a refinance is available.
For sure. You'll hear the buzz. Yep. It's always out there.
Until then, thanks for tuning in, and we'll see you next time. This podcast is sponsored by Residential Mortgage, LLC, NMLS numbers 167729, 196, 576, and 1820404. Equal housing lender.